Good afternoon, everybody. Welcome to TraderMerlin Show for what will be your final week of January. You got 2 days left for the January numbers to set hold and see if we actually do have a January that sets the tone for the rest of the year. As you guys know, I live by market mantras. And one of those mantras is, as goes January, so goes the rest of the year. Now, the big question is, will these next 2 days that we see in the equity markets, really one more day, we have Tuesday's session, will they erase some of those gains and paint a negative picture, which has some of the graphics for today kind of intertwined with this one, which is the market crystal ball. Bad news ahead. I'm sure most of you don't want to hear that. And by the way, thank you, Thomasina, for the 49ers condolences. Good to see you, Matt, Les. Good, Ivan, Agent Sancho, Vernon, Options Markets, and others. Katut, good to see you as well. Yeah, a little sad with the 49ers there. It's, you know, it would have been, to me, that was the Super Bowl game, but unfortunately you lose your quarterback in the first drive of the game. Really hard to come back from that, and, well, you know, especially at such a good caliber team as Philadelphia. But I don't like Philadelphia, so I'm going to be cheering for the Chiefs in the Super Bowl. I guess the good news is I don't have to throw a Super Bowl party this year, and I can actually focus on the game, because if the Niners are playing, or focus on the party wherever I go, because if the Niners are playing, I wouldn't be able to pay attention. All right, so let me go to the graphic here, and then I'll get you guys engaged and interactive here today. Market crystal ball, bad news ahead. As many of you probably saw today, this was not really the best looking equity market. A lot of things tanking. We talked about natural gas near the tail end of last week. Boyle down over 14% today. I did sell some puts on Boyle, which I will talk about that trade here a little bit. Hey, good to see you, Jose. Happy Monday, and good to see you, John, as well. I'm curious from your perspective. You know, what would you see as being, I guess, the catalyst for today's topic? Why am I saying bad news ahead for the markets? It seems like things have calmed down a little bit. We've had this relatively bullish tone going forward and somewhat optimistic on these equity markets. Now, take out today's trading activity, and, you know, you look at this NASDAQ, it's looking pretty good. It actually looks like it's making some higher highs, you know, a little bit of a tiny breakout, a pullback today. You know, it could still keep on trending up. But it feels to me like the markets are foreshadowing, and they're kind of anticipating that things start to, I guess, get a little wonky this week. And really, for me, it boils down to the old FANG stocks. Wow. I don't know if you guys can hear that, but it is absolutely, it's so loud right now from the rain here in Southern California. Thank you very much. Bring the rain. On Wednesday, aftermarket announcement. Well, yeah, of course, Robert, I think that's a part of it, but let's be honest, Robert. I think there's no mystery what the Fed's going to do, right? The Fed's going to raise 25 basis points. That's it. And I did not look today, so let's real quickly bring that one up here just to see if the Fed changed their, or at least the traders anticipate the Fed changing their stance. For those of you who might be new to the program, of course, hit that subscribe button and the like button if you like the show. But this is the Fed Funds Futures, which is essentially a traded product, a futures product, that allows traders to speculate on what the rate of the new Fed Funds Futures policy will be. As you can see, it says up here at the top, current target rate is 425 to 450. That means 4.25 to 4.5. And down here at the bottom, there is a 98.1% chance that we see a 25 basis point increase in the Fed. So nothing has changed there, right? So I don't really think the Fed is the catalyst here. I think that's cooked in. What we are in the midst of is earnings season. Of course, last week we had, you know, Microsoft reporting earnings, and that created a lot of swings out there, and Tesla, right, and Intel. This week you have Facebook or Meta on Wednesday. That's after market close. And then Thursday, it's just like, you know, strap on your seatbelt, 5-point harness for this one. But you've got Amazon, you've got Google, and you have Amazon, Google, and Apple reporting on Thursday. And a lot of the stuff I've been seeing today really started to paint a negative picture about supply chain disruptions, earning misses. All the talk earlier this morning was about Google and how Google is expected to miss heavily on their numbers from ad revenue from YouTube, and really pointing at that as being a drawdown for them. So I think what you're seeing today, and this is left to be determined, we don't know at this point whether they're going to have good news or bad news. What we know is the markets are anticipating and pulling out that crystal ball and saying, hey, we think that the markets are going to miss on Facebook, Apple, Meta, Google, Amazon, etc. So that's the stage that's being set. So real quickly, let me go and show you what the expectations are, just so you can see how diverse they are. Here is Apple, AAPL. And what I'm showing you is just from Yahoo Finance, and this is showing you the last 4 quarters and the expectations of the current quarter with regards to earnings per share. And you can see Apple has actually done a pretty good job. The last 4 quarters, Apple has beaten, now slightly the last 2, but still they've beaten expectations. But as I mentioned before, you notice what's been happening to these blue dots, right? They're getting lower and lower. They've really just been lowering that bar, a slight raise for Q3. But look where the bar was raised for Q4. I don't know. I'm always wrong with regards to earnings. I think it's a crapshoot. But boy, they're expecting, the previous number was, looks like about what, $1.28 earnings per share. And now they're expecting, call it a $1.95. That seems to be a pretty significant jump, especially considering that you do have factories that were shut down in China, may have just seriously disrupted the iPhone 14 Pro and other models. Apple is actually saying right now, or at least the analysts are saying, that the shocking savior of Apple's season, of earnings season, might be their MacBook Pro, or their computer. So I thought that was kind of interesting as well. So, all right, fine. Shouldn't all that ad revenue from TraderMerlin show improved? Yeah. Yeah, the $100 I make a month, Gary? If you look at it, let's see, I do an average of what, 5 shows a week. That's 20 shows a month, roughly, and I'll make about $150. So I'm gonna make like maybe 25 or $5 a show. Yeah, baby, that's really worth it. $5 an hour for all the work I put in this one. Ad revenue ain't cutting it, bud. All right, so let me go to the other companies reporting earnings just so we can see how they stack up. Apple looks like the expectations are just literally off the charts. Really heavy pop there. You look at Amazon. Amazon's been pretty much dead with regards to earnings expectations for 4 consecutive quarters, and now they're expecting it to be just in line. If you go back into Q4 of 2021, you had 20 cents per earnings per share. We jumped to 40 cents in Q1 of 2022. They missed that. That was expectation, but they missed it. They missed it in Q2 of 2022. Q3, they barely beat, but again, it was only 20 cents. So over a year, their earnings hasn't grown at all. You've really seen earnings just declining, and the estimates are staying the same. Right now, you are looking at, looks to be about 18 cents earnings per share estimate, which is the same as it's been pretty much for the last 3 quarters, but we'll see if Amazon misses on those. Next one, Google. This is the one that's really ugly, and this is where a lot of people are pointing their attention at today with their ad revenue from YouTube. Notice those blue dots have been going down every quarter for the last 5. That is the expectations of earnings revenue, and lo and behold, Google has missed the last 3 quarters in a row. That does not paint a pretty picture. And remember, Google is a major component of the NASDAQ and other ones. So, a Burger King $5 special to show. Yeah, there you go. There you go. The Happy Meal. And then I can get a cardiac arrest down the road from eating all that trash and fast food. So there's the Google. I think this is going to be really the ugly one. The expectations here have been getting lower and lower. You notice on Amazon was sideways. Apple was expectations of serious earnings beat, an increase in earnings per share. Google, declining. And then lastly, I think I put Meta on here. Meta has also been on a pretty aggressive down slope here. Q4 of 2021, they were expected to make $3.80 per share, and they came out like, $3.70. Okay, that was a miss, not horrific. But lo and behold, you go fast forward to Q3 of 2022, they were expected to make only $1.90 a share. That's 50%. So their earnings per share has dropped 50% in just 3 quarters. Now they're expecting a little bit of a pop back up here with their Q4 expectations. But the reason I bring that up is just to show you what the overall trends are. And I think it's setting up, at least in my mind, the way I see it, and I could be totally wrong. We'll have to wait and see what the numbers are. You get this feeling like, okay, we came to some overhead supply on the equity indexes. It feels like Monday, Tuesday, Wednesday is going to be pain days as people are going to spread that fear that, Facebook, Meta, or I always call it Facebook, but Meta, Apple, Amazon, Google are all going to miss, and it's going to be an absolute fustercluck for the markets this week. I love that word. Whoever sent that one in, thank you very much. A fustercluck for the market. Now, part of me, the conspiracy theorist, the guy who's been trading for 20 plus years, just goes, this is media BS. I feel like this is the media scaring the crap out of people so that the markets will tank the next 3 days, so they'll accumulate and buy on these earnings announcements. My conspiracy theory tells me that. That said, I'll tell you how I'm playing it. I'm not trading any of those symbols I mentioned. Of course, you guys know I'm not allowed to trade Apple personally. So I have Meta's earnings on Wednesday, which means Thursday I may make some trades depending on how badly they miss. Like if it gets slaughtered and it's down 20, 30%, I might jump out there and start selling some puts and collect some serious premium because I think long haul Meta will be okay. That will be the same plan of approach for me on Friday morning once we see Apple's earnings, Google's earnings, and Amazon's earnings. NQ was up 10% month to date. It was time for a pull. Yeah, right. And we talked about that on Friday's show. We said, look, this has been a tremendous rally. If you go down to the bottom of the month, from bottom to top, from the opening of January, it was up about 5%. But really, bottom to top, 10% rally intra-month is a pretty damn good run. We're definitely due for a pullback. No big deal there. Okay, so as far as how this all plays out, not sure. I think it's interesting watching the charts of these stocks. Let's go back to the price charts and check out those candidates. We'll start off with Apple, which is your big daddy. Now, Apple wasn't exactly at supply, but over the past couple of weeks, Apple, going back to January 3rd till the high of yesterday, had seen a rally of 18%, I think. Yeah, 18%, basically over 1% per day. That is pretty damn impressive, and that's, of course, why we've seen this NASDAQ have a similar picture, right? The NASDAQ, if we go back to, let me just real quickly to the monthly here for you guys. We'll go back to January 1st official trading day, which is right here, and put it on snap mode for everyone. If I go to where we opened January to where we are, the peak, we were up 10.66%. So you were right, Big M. I actually was wrong on that one. No problem. And then from the bottom, which was here on January 6th, it's been almost a 15% move for the NASDAQ. So yes, definitely due for a pullback here. I had mentioned that it was good news because we broke above this range, although we still have this topping tail to deal with going back to December 13th, but it felt more and more positive. I guess the question at this point is, why can't you trade Apple? Oh, why can't I trade Apple? I'll get to that in just a second. So it felt good. I think there's a pullback coming here. The question is, how low of a pullback do we go? Do we get it way down here? I don't think you'll see the NASDAQ 100 drop that far. I mean, we're currently at 11,968. The strongest demands that I see on here is going to go all the way back to about 11,400. So I don't see a 500-point drop in the NASDAQ over the next couple days. But as you all know, anything can happen. So there's Apple. Let's go to Google. No, Google came right into overhead supply, sold off from there, so no problem. We do have an unfilled gap as well on Google. It goes all the way back to January 19th. Chart looks decent. Amazon, right? Amazon does have this big upfilled gap to the upside. The gap started about 111. You can see going all the way back into October 27th. We had that nice gap down there on their last earnings call, and we'll see if that happens yet again for Amazon. Last one, we wanted what Meta. Meta is definitely due for a pullback. I mean, this thing has just been absolutely ripping. From the lows we saw back in November 4th, it's up 73%. Now, of course, it had been down dramatically. I actually thought we'd see a big pullback when it came and closed the gap. Well, it didn't pull back literally at all. It was like one day of a drop down. So, there are some key levels here on these securities. Bottom line is I think the markets are spreading fear right now on the expectation that they're going to miss earnings, and I think that they're setting people up for that. Personally, I don't really see them missing that badly. Remember, that bar has been lowered and lowered and lowered and lowered. Economies have been opening up. We are consuming, even though we're seeing retail sales numbers decline a little bit. I still think they'll be okay with earnings. But that's the fear that was precipitated out there with the crystal ball. By the way, this is, in fact, another graphic generated through that animations or artificial intelligence software I've been using. I thought that was a cool one. I said, give me a bear inside of a crystal ball with stock market data. And of course, it can't spell at all. So there's all this crazy text on the inside, but I think it looks pretty damn cool. All right, let's see. Liz says, I have those earnings expectations have they just been set? If not, when am I sure that explains a drop today? Well, it's not that it necessarily that explains a drop today. It just, when you look at the big picture, we had nothing on a macroeconomic perspective. There was no major issue with, global I don't know, terrorism. There was no, major offensive from Russia. North Korea didn't fire any missiles. Donald Trump didn't send out any crazy tweet. We did have some really horrific stuff happening from police officers in Tennessee, which we can leave for not this show. But wow, that was absolutely terrible. You did have the 49ers lose. Maybe that's what it is. It's because the 49ers lost. Markets are going to tank. But there really wasn't anything big. There's no major earnings today. So you kind of have to step back and say, well, what is it? What would cause that sort of action? And maybe it's profit taking, just at supply. But in reading the headlines, and again, I'll read you one of my rules, which you guys know I have my 10 laws. The number 3 on my 10 laws list says, ignore the news and listen to every word of it. Oftentimes, the news is already reflected in the stock's price by the time it comes out. However, understanding what is happening with the market overall is of vital importance in planning your next attack. Well, I think that's kind of the approach I'm giving here today is the market is flooding everybody with news on expectation misses for Google, for Amazon, for Facebook, and for Apple. Now, Apple might be the only one that doesn't have like a lowered estimate. I mean, it seems like everybody else has the same or slightly higher earnings estimates, whereas Google is lower and Apple's much higher. So I just feel like the media is issuing these press releases, issuing these stories to precipitate a fear so that people sell and get into a bearish mode, and then those earnings come out and things rip to the upside. Just what my conspiracy theory brain is telling me about this earnings season. Because today was a pretty ugly day. I mean, you look at the numbers. Let's start things off with crude oil. You're down 2.23%. Yes, it was a correction. I guess the question would be, how low do you see crude oil going? I don't see any really great supply or demand zones on this chart to speak of, honestly. We were talking about how it was stuck in this yellow box range and said if it breaks down below it, short it. If it goes above it, go long. Oh, I didn't see that one, Ganesh. I didn't see. I didn't see that one. NASDAQ on the other side of this. We had broken through those highs and just came ripping back down today. Although you look at that candle today, down 2.08% in the NASDAQ futures, it doesn't really look like anything, right? That was bad. 2% is a bad day, but grand scheme of things, it actually does not look bad at all, considering where the NASDAQ has come from. So, yeah, it was a 2% down day, but I just call that taking a breather in this big uptrend from here. Now, cryptocurrency, this was about time. I mean, I still think this was long overdue. I'm not making any forecasts on where Bitcoin might be headed. Personally, I do think that in the long haul we're going up, but as I mentioned at the top of the year, I think you're going to see a lot of volatility from cryptocurrencies this year because of regulation. Now, moving up the list with our indexes here, Russell 2000, still looking great. I mean, yeah, you were down 1.35% today on the Russell, but, no big deal. We were down more than that a couple weeks ago. On Wednesday the 18th, we had a day that was way bigger than today, and it stopped after 3 days decline and then ripped to the upside. So who knows if this is just simply a pullback. I'm kind of guessing that it is, like I said, with these earnings. Maybe by Friday we start to see the kick up. S&P 500 now 1.27%. We broke out of that yellow box range, which was the kind of the apex, getting to the apex of this symmetrical triangle here. And now we have a retracement right to that area where it broke out from, right? So right around 40 or 4,035. And now we're retesting that right now. It's at 4,032. So that's decent. Honestly, a small pullback into a demand zone, great, right? What was supply becomes demand, and all of a sudden, this should, in theory, move to the upside. Dow, down 0.77%. Don't worry, it's not all negative. There's actually something that was up. Don't really care about this chart because it's in the middle of the yellow box, so who cares unless you're selling options. And then lastly, gold. Gold, even though it shows a red candle there, it was up on the day over about a half a percentage point to 1,939. Let's see, big ups. So quite a few of my QQQ put positions today. Hit my target. Had to stick with the plan. There you go. Love it. Love it. It's tough sometimes when you get out of a position. It does, it would have made you a lot more or whatever. But the rules are rules. Follow your plan and be happy that you made money. And if it does continue to go and would have made you more, don't worry about it. Let me go into a couple things that I had here. Let's see. 49ers in the market, let me introduce you. Oh, wow. The guy tore an elbow ligament. I mean, I guess it ruptured an elbow ligament. Give him a break. I love all people hating on the 49ers now. It's like, we actually played a decent game, but we don't have a quarterback. He literally couldn't throw the ball past 5 yards. So what do? They're running the ball, so your defense just comes in, and, I mean, there's nothing you can do there. So let me go into the bigger story. By the way, let me tell you about the guest schedule. This week, I'm going to have Jerry Baldwin on Wednesday. We'll talk about futures, intraday futures trading. On Thursday, day after our FOMC announcement, we're going to have none other than Mr. Bill Addis on the program to talk about, yes, the frontline numbers, which would be raising 25 basis points, but also giving us a little insight into some of the things that aren't mentioned in mainstream media, which is why I love having him on. He always tends to know a lot that's going on behind the scenes with some other little numbers that might have been modified. So we'll have Bill Addis on Thursday, and then not tomorrow, but next Tuesday, I'm going to have John Rowland on the program to really hopefully, set the stage and explain what on earth is going on with natural gas. That is the crazy story here. You know, if you look at the headlines on natural gas, let me bring up natural gas futures here. Give me 2 seconds to load that up through my hundreds of different things. Natural gas is down 6% today. So as you guys know, I have both sold puts and bought calls on natural gas. My puts are on UNG, but let's just stare at the futures for a second. So here's UNG, absolutely just falling apart. It was up at $10 back in August of 2022, and now here we are in January of 2023. So what, 6 months? We are all the way down to $2.67. Now, you can look at the longer term picture here and argue that we are right at an area of demand or coming right into an area of demand right around 260. But really, what a lot of this has to do with is just supply and demand. I mean, that's really what natural gas is all about. UNG. I mean, who's buying gas? Who's needing gas? And generally, it boils down to, if we have those bomb cyclones, those freezing temperatures on the East Coast or anywhere in the U.S., really, then you start to see a surge. But the forecast from the National Weather Service has been that it should all start to stop. Like, really not anything cold after February. Those are the numbers that were released yesterday and today. So you can see the shift of people saying, hey, let me get out of natural gas, and they've been unloading it. Right now, UNG was down 7% today. So I have $9 strikes for April, so I'm really not concerned about that at all. I did today take a real risky position. As you guys know, Boyle is a double long natural gas, right? That just ruined. I agree, skilled stocksman. Anyway, well, you guys are going to be talking about football today. So I actually sold the $7 puts today. Now, what you guys are going to say is, are you nuts, Merlin? Why the hell would you go out there and did you make the Boyle play today? I did. I did the Boyle play today. So as you guys know, last week on Thursday, I sold Boyle puts at $8, which was actually the math I went and looked. It was 2.5% rate of return for 1 day, less than 24 hours. That expired worthless, which is fine. And then I said, we'll see what happens Monday. So I was happy to see natural gas getting slaughtered today. And I looked at Boyle and I kind of waited on it. And I waited and waited. Got near the end of the day. And I sold 100. So that's 10,000 shares worth of Boyle. So that's kind of a little bit risky. I sold 100 of the Friday put options. And my strike price is $7. So let me put the numbers on here. And we'll go 7. Okay, so just so you guys can see, I'll even have to go into like an hourly just so we can get a little closer to the line. You know, there's where my Boyle puts are at. Now, that's really, really aggressive. However, I still had, by end of day, 28 cents to get to my strike price, which means I got Tuesday, Wednesday, Thursday, and Friday, 4 days to drop another 28 cents, which it could easily do. It was down 14% today. The rate of return on that, I collected 40 cents worth of premium on those. So I'm getting roughly 5.7% rate of return for the week. And if I do get exercised on those put options on Boyle, which I collected 40 cents on, then my average price is going to be $6.60, which is down there. Now, it could easily get to $6 this week. It could get to $5 the way this thing has been falling. But even if I do get exercised, and let's say it closes next week at $6.50, well, I most likely will sell those $7 calls and collect a premium on this has been really, really, really sharp. I mean, the premium's off the charts for the weekly. I know, it's a wild one. It's not that crazy big, Ev. I mean, I've done crazier stuff, but it's definitely a very, very, very speculative trade. I don't know if I would say crazy. It's not quite having Christian McCaffrey play quarterback. Huh? that was nuts. I was kind of hoping he would have gone in there and won the game, but they didn't even bring him in. They just let a one-armed quarterback in the game to play. That's nuts. So that's the trade I made today. That's Boyle, and again, we'll keep an eye on this one all week. In a perfect world, this thing's going to close at $7.01 on Friday. If it really tanks, well, I'll have to do damage control when we get there. But long haul, I'm actually bullish on natural gas. I do think you're going to get a bounce. I don't think that this trend in natural gas is going to reverse, and all of a sudden it's a huge uptrend. But I do think that a reversal, this is an hourly, let's get out of that. I do think you're going to see a pullback here at some point. And I know people keep asking me if I use Fibonacci. I actually really am not a huge Fibonacci fan, but I do like it occasionally in situations like this, when I'm looking for a potential retracement, right? And if you look at the more common ones here, 38.2 or 0.382 is your normal retracement. Well, if it got anywhere close to that, that's $4.30 on natural gas. So that would obviously do well for my call position, that do well for my put position because I sold puts on UNG. All in all, I think even a small balance would do very, very well here. And talking to other people I know in the natural gas space, they're like the absolute floor in natural gas is $2. So we'll have to wait and see if we get down that low. Do you actually drink whiskey on Mondays also? No, I don't. I really don't drink during the week, Agent Sancho. Actually, that's not true. I usually do trivia nights at different local establishments around here, sometimes on a Tuesday, always on Thursdays, and they're usually at breweries, so I'll have a couple beers on a Tuesday night or a Thursday, but only whiskey I'll have is Friday, just a nice glass of whiskey here, maybe on the weekend, but yeah. All right, let's see. I work all week, but I watch replays. Good to see you, Patrick. I have to put 1K into 4 stocks for the next 2 years. Where should I put it? I'm not even going to go there. I'm not a financial advisor, man. I can't do that type of stuff. I guess you got to figure out what sectors or market segments you think are good. I know that there's a couple people here who are very big on EVs, electric vehicles, and maybe later on this week we'll talk about the EV space and, the Lucid, right? You got big... Was it Saudi Arabian company, I believe, is making an offer to, or going to try to buy the remaining stake in Lucid. EV companies doing great. Maybe spread that around a little bit. I personally, if you're going to try to buy something that's going to have to go for 4 years. Did we freeze? My video looks frozen. Interesting. Oh, it only looks like on your end that it's frozen. Anyway, if you no, I guess we didn't freeze. If you're looking at something to hold for a couple of years, I think part of it is you got to eliminate your risk. And from that, I would go through ETFs. I know it's not what you want to hear. Most people are going to want to go into individual securities, like give me Tesla, give me Apple, Facebook, Meta. But if you're going to manage it and be on it with entry, stop loss, price target types of things, yes, go individual stocks. You'll get a greater rate of return. If it's just kind of a buy and hold and not have to manage it on a regular basis, go with ETFs. I think that's the best way to go. Ford lowered the price drops. You know what? Not only did Ford lower their price, there were a couple others that were talking about this. So I think you can start to see this more just battle to lower prices to gain market share. So more electric vehicle companies are going to start to lower their prices to compete with Tesla, and then Tesla will start to lower their price because they've cornered the market on the battery side, so they can have more economies of scale and efficiency and vertical integration. So I don't know. Anyway, well, don't do a Hail Mary, Patrick. If you said you're going to put, so you got $4,000, right? You could start with a $4,000, you could be using directional options, which is risky. I mean, selling premium, you're not going to really make that much money. It'll be more consistent and smaller rates of return. But go with options or find a leverage instrument that you can more actively trade, unless you just want to be a buy and hold investor. Isn't the options premium higher before earnings rather than after earnings? I see you do. Yeah. So the reason for that, Ganesh, is before earnings, yes, options premium is definitely way higher because nobody knows where it's going to go. What I'm counting on or anticipating is if it's a big miss on earnings and people really freak out, I want that real big panic where everyone's just unloading, because what happens at that moment is everyone's going to try to buy puts as well. So before earnings, I would say that premium gets bigger on both the puts and the calls. As soon as earnings come out, and let's say they miss badly and they're down 20%. Call option premium is going to just disappear. No one's really caring about calls. They're all going to be trying to buy puts for protection. And that's where I come in going, hey, I'll sell you some puts. And the premium for those, because the demand is so high, generally after earnings on a bad miss, that the premium is much better. So there you go. When my son asked me where to put my stimulus money, yeah, it's easier, Lori. I say just go SPY, right? Something that's just simple and easy. It's broad market, so you're going to see not the biggest gains. It's going to be the market gains. And I'm right there with you. Part of my 1% strategy, I've had a lot of people ask me about that lately, is, for those of you who might be new to the program, I have a video called the 1% strategy, which is something that I've implemented for a few years now. And I've been shifting more of my focus towards that strategy with modifications of different accounts. And really, it's right around what Lori's talking about. When I have an ugly day like today, I'll look out there and see if there's enough premium on some of these ETFs. The Qs, the SPYs, you guys know I have a watch list right here. And I'll scroll all the way to the bottom here, which is all my major SPDR ETFs, meaning utilities and financials, building materials, healthcare, industrials, etc. Today, energy down 2.29%. So I looked at energy today and I was like, well, I didn't see any great premium on it, even though it was down 2.29%. I just didn't I didn't feel like there was enough opportunity there, so I didn't go that way. On the Qs, there actually, in my mind, I could have gotten, I think it was the 280s would have given me about 1% for the next 3 weeks, which is very appealing, but I already have most of my capital deployed in other options at this moment, so I'm actually kind of trying to keep dry powder until after the announcements this week. So like I said, on Thursday morning, I'll be looking at Meta for their earnings announcement, and then on Friday, I will have hopefully some capital available to be looking at either Google or Amazon, as I can't trade Apple. So there you go. It doesn't lie, Skilled Stockman. Skilled Stockman says the inverted yield curve doesn't lie. Well, let's take a peek at that since I did not bring that one up yet. Let's go up here to the top where I have all of my bond products. Here's your yield curve. This is the true yield curve, which is the 10 and the 1. And notice it's just staying down there. It hasn't really had any surge up. This is not good for the economy. So again, I can come up with arguments that say growth in the economy and we're going to do okay. And then I come up with other ones that say not looking good at all. And that would be this guy here, inverted yield curve, meaning the shorter term is going to pay you more than the longer term, which should not happen. Now, if I go to a weekly on this, I actually go monthly, you can see that I don't have much data on the 10 versus the 1. I only go back to 2008. We've never even been close to this much of an inversion. Now, if I go to the 10 and the 2, which I get a lot more data on, so we have been inverted, but nowhere near the extent that we are in this one, nor as long. Right? We haven't even started to bounce back up here. All these other ones that happened back in 1989 and 88, we were down sharply, but started to rally back up quickly. Same thing back here in 2000, sold off aggressively, but then came right back. We chopped a little bit back and forth here in 2006, 7, and 8, tiptoed across it in 2019, and here we are just melting down below it with no real bounce coming yet. So I'm with you, Skilled Stocksman. I think that's a pretty ugly piece for our markets going forward. The other piece to keep an eye on will be that dollar index, which we had a small little move up today. Let's go back to your daily on that one. A little bit of a hook. We were talking about it potentially bouncing in that yellow area, and we're getting a bounce. Now the question is, how big of a bounce do we get? Is this just a couple day thing and then it melts down again? I don't know. It seems to me, I don't think it's going to be a big pop for the dollar index. All right, let me go to a couple lists of questions here. Believable Direction, who is here today, I think he was in here. I believe I saw him earlier. Asked this question. He said, would you please comment on the price action of the S&P 500 in the last 15 minutes of the day? It seems these monster candles, green or red. Is there some market condition that leads to such candles late in the day? I usually associate that with the move of economic data and Fed announcement. Could it be driven by earnings announcements? Yes, absolutely. You could absolutely have those actions happen because of an earnings announcement, but that would normally be on an individual security, right? Typically, you don't get huge swings in an index like the NASDAQ, Dow, or S&P on an earnings announcement. That said, the NASDAQ is very heavily weighted in a couple of companies, Apple and Microsoft, and Google actually is fairly heavy as well, but it's split into two different stocks. So if either one of those three come out with earnings, you could see monster moves in the equity markets, and that may be in the last 15 minutes. But in reality, what it is, it's order flow. And we talked about this last week, and I can show you a 5-minute chart here. Let's just do SPY, and I'll show you a 5-minute chart so you can drive home that idea. Here's your 5-minute chart of SPY, and let me add volume onto the bottom. I'm going to take out the extended hours trading, put it to regular hours. And you can see we get our normal price action here, no big deal. Now, if I add in volume, it looks like the Golden Gate Bridge typically. You get in the morning a high spike of volume, then it lowers, drifts down to almost no volume middle of the day, and then near the end, you get the huge volume surges. Again, this has a lot to do with orders coming through from mutual funds, redemptions of different funds that might be NAV, meaning you can only buy and sell them at the end of the day. It also has to do with institutions, building positions, and trying to get out or build a position for the next day. Most of the market is out. It's a day trading type of environment, and I always laugh about this because when I learned day trading back in the late 90s, mainstream media, I'm talking Fidelity, Charles Schwab, all these firms are going, don't do it, it's bad, day trading is a scam, you'll lose all your money. The reality is you talk to almost any floor trader out in Chicago, and most of them were flat at the end of the day, right? That was it. Like, just get in, get out. These are a traded instrument. Just be in, out, and don't take that overnight risk. Well, institutions are the same way. So as news events of the day pile in, institutions are building or liquidating positions, and they know that the equity market closes right at 4 p.m. Eastern Standard Time. So what do? They see that door closing, boom, you got to throw a whole bunch of orders out there that may have come through that you need to process. So that's the reason why you see that believable direction is generally just order flow processing, people getting out by the end of the day, or maybe even institutions executing for clients that they want to buy shares by the end of the day. Most of your positions are day trade, swing, or medium-term positions. No, I would say most of mine are swing. I don't have the time to do day trading every day, so every now and again I do, but most of them are going to be trades last a couple days to trades last a couple weeks. My 1% strategy is a 30-day strategy, so that's pretty much the longest term I'll go is like a 30-day where I'm selling those options. Let's see, other question that came through. So I wanted to get to this one because there is some truth to this, but I think we're different. How many of you were in the real estate market? Hey, we broke the 100 concurrent viewers. Something must be going right today. Thanks everybody that watched today. I appreciate that. Again, for those of you who might be new, hit that subscribe button. We do this show every day, Monday through Friday at 2 p.m. Pacific time. So Jason M says, interest rates are going up, real estate is going down, plenty of sheriff sales coming. Think 2007, 2008. How many of you are real estate people in the real estate industry? Right? I think that you would agree that this is, as they say in Southeast Asia, same, but different. So if you go back into 2005, 6, really getting to 6 and 7, you could go to the lender and they would ask you, okay, do you have a W-2? And you're like, no, I left my stubs at home. And they go, oh, it's okay, fine. How much did you want to put down? No, I don't want to put anything down, right? So the early 2000s was just idiocracy. If you had a heartbeat or could breathe, you could get a loan. And if you look at the Big Short, I don't know whether it's how true it is, but they're making fun of her. There's that one stripper who says she owns like 6 homes. Pretty sure her stated income is not what's needed. I mean, I understand some strippers can make some good money, but you're not going to be making enough money to be funding 6 houses and doing ladder loans, loan on top of loan on top of loan on top of loan in this environment today. I think because of what happened in 2007 and 8, we will not see that same sort of liquidation that we did. They're going to make sure you're qualified. You're not going to get a home today putting no money down and having stated liar loans, right? Just stated income. No, they're going to check W-2s, and they're really critical on that. You also have to meet different economic thresholds as well as making sure that you can make a 20% down payment. I have yet to see anybody come to me saying they've got a house for less than 20% down payment right now. Not sure if they're fudging those numbers, but they're being much more strict. So I agree with you, Jason, on interest rates going up, and that could put pressure on the housing market. But I don't think we have the same amount of leveraging going on and people taking too much risk. I think that the people that are buying homes have proven that they can make those payments. Whereas back in 2007 and 8, 5, 6, 7, 8, I don't think these people had to prove anything, and that was the big problem back then. So yeah, I do think housing market's going down. I like you say, sheriff sales, bring them on. The house that I purchased was in foreclosure. I will be looking, if it does happen again, to buy maybe more real estate in foreclosure. I could use a couple auction sites as well to purchase some properties. So if it happens, it happens. Bottom line is, don't ever live beyond your means. If you can't afford that house and think, what happens if I lose my job for 6 months or so? Can I still maintain to live there? If the answer is no, then you probably shouldn't buy that home. Inventory is still historically low. Yeah, I was actually walking with a friend. I have some family in from Germany for 2 weeks actually, and we were walking around, and I saw a for sale sign. I was like, what? I have not seen a for sale sign in my neighborhood in probably 6 months. Probably less than that. Probably like 3 or 4 months. No, not one home for sale. So yeah, lack of inventory for sure. I think it's people like me who are thinking of selling, going, you know what? Prices have come down too much. Oh wait. But somebody just bailing over there. So there you go, Jason. Let's see. So this is I actually wanted to start a site on this years ago. And there's a thing called 144 filing where insiders have to write and disclose what they're doing. Any institutional ownership has to be documented and recorded. I think it's over 10%. Anything that they do has to be tracked. And I'd like to see what insiders are doing. However, another thing would be interesting to see is what are short sellers doing. So Michael says, what is the best way to see how many short positions are open on Tesla? With a squeeze like this, I would be curious to know if a large number of short positions have been closed from day to day. I know Yahoo Finance has percentage, but it seems lagging and doesn't update daily. I don't know if there is real-time data on that. If there is, you are going to have to pay a lot of money for that. Most of the info that you get where they say, here's your short interest on a specific security, is 30 days late. If you look at like hedge funds, etc., a lot of these guys don't have to report their positions. It's quarterly reporting? So they report once a quarter. So, I don't really know if I trust the short numbers that come out, the data that comes out. So for example, let's go look at what I have here. I think I had Apple up on the screen. Man, I'm gonna mess over here. There's Apple. So here you go. There's Apple. If you go here, I think it's under statistics. You scroll down here, and here you can see shares outstanding, shares short. And this is so this is actually what, 2 weeks old? What do we got today? It's the 30th. So this is 2 weeks old. So it used to be a month. Now it looks like 2 weeks. They have the amount of shares short. Now, look at Apple. Like nobody is short Apple. When you see a short ratio, a 1.4%, or here's your short percent of float, that's less than 1%. That's ridiculous. Like that means nobody's shorting. Generally, you see a 5 to 10% number, that's like okay. So let's take a real quick look at Tesla. All right, get Tesla's short position here, which is probably much higher than Apple's. Not much, only 2.87. Shares percent, that's not much at all. So, there was a lot of talk about this short squeeze, but honestly, it doesn't look like there's enough there to be squeezing. Right? A short squeeze should be much, much higher numbers. Let's go look at something like GMC or GME, GameStop, right? Now, this one has been squeezed a ton, but notice it's still at 19.8%. Oh, nearly 20% of all the shares out there are short right now. Now, that's heavy. Now, if you are interested and you want to know which companies have the highest short interest, you go to something like FinViz. It's got a really nice filter for you. It'll take me a second to load all this one up. But up at the top here, it's got a screener. So you click on screener. I believe you can see here it says float short. I'll say anything over 20%. And now did it filter? So there's 108 companies. I believe 108 companies that have short interest over 20%. Now, unfortunately, the way this one works, it doesn't give me the list. I can't see the short interest there. Maybe if I pay for it, I could, add that in. But all of these have very high short interest. So that might be one way if you're looking for short squeezes. I know that there's sites out there that will track high short interest stocks, but I just don't know how long the lag is there. If there was real-time data, I think it would be really important. You could absolutely make some nice trades off that. But this is all lagging, like very lagging. Could be days, could be weeks. Don't know. All right. Subject to agreement. It's a route to purchase real estate without the bank acting as a middleman. You talking about auctions? Yeah, I mean, I love the auction side of things. Last part, I'm going to wrap up here because this is something that's kind of interesting. As you guys know, natural gas is crashing significantly. The price chart of natural gas is just exceptional. Just really, you don't see things fall that far, that fast, and that consistently. Here is let's go to a weekly just to condense it down a little bit. The decline in natural gas going back to its peak, which was in August of 2022, to where we are today, you're looking at the prices of natural gas having dropped 73%. And this is why, in some regards, I think capitalism is flawed. Because, I'll read this question here from Tom and then tell you my personal story. Tom says, I heard SoCal gas bills were going up 200 to 400%, and lo and behold, my gas bill went from $60 to 170, and it was not due to usage. It was a big rise in price per unit used. Now I see SoCal Gas blames it on their supplier, Sempra, which also just happens to be their parent company. It would be interesting to tie this in with the current natural gas prices and how and why Sempra should have been using futures unless they did and are just gouging. So my guess is that they did use futures, Tom. Just so you know, my bill typically is between 30 and 50, depending on the time of year. So my bill is very, very low. I don't really use the heater at all in here. Between 30 and 50 bucks. My most recent one, $250. I was just like, what? Are you kidding me? Now I have had company, so I've kept the heaters on a little bit more, but still, that's a ridiculous rise. Now, I don't have the time to go and check all the Sempra stuff, but my guess is what happened is as natural gas prices were surging, Sempra was probably locking in their price because they were concerned it was getting too high. And now they're probably stuck in a whole bunch of contracts that have them paying, $9, something like that. Now, you would think that over time that's going to start to drop. I would hope that that's the reason why. However, Mr. Cynical Merlin over here says that Sempra is just taking advantage and squeezing people and gouging. Now, I'm sure if they were gouging that badly, our regulators, our governing officials would say something and there'd be an issue there. So I think it's a combination of a little bit of gouging and also that they locked themselves in using futures and basically committed themselves to paying much higher and pass that through onto us. Now, I'm hoping that one drops here. I'd love to see my $35 gas bill again as opposed to $255. That was nuts. Let's see. Yeah, no, it's just they're passing on costs. Is Sempra publicly traded? I don't know. Let's see. Sempra, no, I don't see it here. I'll see if I can find a stock of Sempra and see what it looks like. Because, man, if they're making those kind of profit margins, having jumped, mine's literally, if I go, let's just say I had a $50 bill and it went to $250, I'm 500% increase. That's insane. Well, I don't know if you can put this on. I wouldn't put this on Biden. This is natural gas supply and demand, but it's also people at Sempra, if that's the SoCal Gas, who they're relying to get their gas from, improperly trading and locking in prices. That's the whole thing with speculation. You can do great like Southwest did years ago and locked in their gas prices at much lower price points using the futures markets, whereas all the other airline companies didn't, and they got hosed. So let's see. Not auctions, owner to buy. Oh yeah. Yeah, that's a little bit trickier. I unless you really know your stuff, I wouldn't do buyer direct. It's funny. Diana Hill in the real estate class that she built did a really cool thing where she had a whole document on how to approach people directly, not using filters as well, but also just going door to door and the talk track on how you can make an offer for someone's house and say, look, let's avoid multiple listing, let's avoid all these extra fees, etc. You'll make more money, and we can just do it without any hassle. So there you go. Is it SRE? Thanks, Mega. Let's check out SRE. Here's your weekly on SRE. If this says DBA Sempra. Okay, I saw that one. I wasn't quite sure where that was. Well, I don't see anything really that says their profits are surging here or really kicking butt at all. But yeah, I don't know, Tom. It just seems real fishy that prices have jumped that much. Really just blew my mind. All right, let me wrap up here for today. Philip, I wanted to get your ES question, and I had a couple others I need to get to, but I got to wrap the show up today. There are, as far as earnings calendars go, let's start with the earnings first, and then I'll go to your economic calendar. We do have AMD. Now, remember, Intel missed earnings last week and just really did not look good. Intel just tanking, honestly. AMD reports earnings after market close tomorrow. Intel, after their earnings, they just kind of been, I don't know, how do you say it? They haven't done anything, right? Here it is. They had the huge gap down and pop back up. I did sell puts, just as you guys, I think I mentioned that on Friday's show. I sold puts on Intel. I don't remember the strike price. I think I'm at 27 or something like that. So fine. I think I'm okay with Intel for the long haul. Collected some nice premium on that, on the fear and that big drop down. I didn't really dive into them. I don't really look at the earnings conference calls or anything for Intel or semiconductors, but AMD's reporting earnings as well, so there may be a similar situation there with AMD, so be careful with that one after market close. You also have Western Digital aftermarket as well as Snapchat, which should be called Snap Trash. Otherwise, ExxonMobil, Pfizer, Caterpillar, General Motors, and Mickey D's reporting earnings tomorrow. That's before market open. And then finally, economic announcements. There's a ton on here. Really, every market and economy and country is going to have something. Japan's got housing starts and consumer confidence. For the European Union, you got a lot of import and retail prices for Germany, also for France and the EU as a whole. You have preliminary GDP coming out for Europe. You have money supply for the UK. And then down there at the bottom, we get the US. Talk about housing. I know it's really hard to read, so I'm going to do my best to get these going for you. But 9 a.m. Pacific time, so 30 minutes before the market's open, you have, 9 a.m. Eastern Standard Time, so 30 minutes before the market's open, you have HPI numbers, Case-Shiller Composite 20 Home Price Index numbers, and Chicago PMI, as well as consumer confidence. So quite a few big numbers there for the U.S. markets as well. And that, my friends, will do it. That is your show for today. I don't have anything really locked in as far as topics go for tomorrow. So for any of you who might be new, or any of you who might be long-standing veterans of this program, if there's something you want me to cover on tomorrow's show, do it. Send them in. Just go to any of the YouTube videos. If it's down below this one, great. But you can comment on any video. It comes through a little application window, and I can see all those. So comment on any YouTube video. Say, hey, here's what I'd like to see covered on tomorrow's show. And I'll do my best to, if I have time permitting, to get to that topic and cover it on tomorrow's show. You can always email me at TraderMerlin@gmail.com. That said, everybody, I hope you have a fantastic remainder of your day. Let's see if this pain persists until we get our FANG stock super tech juggernauts reporting on Wednesday after market close. Take care, everyone. I will see y'all tomorrow for the final trading day of January.